Summer is over, even if not technically until September 23rd, and we're heading into the fall real estate market. Traditionally, that means a slowing market for real estate agents. And the last 2 years were anything but slow. However, we all know that was an anomaly. Today, we will discuss the changes we see ahead and what they mean for the real estate market in 2022. Hello, I'm Jeff Moss, and welcome to All the Right Moves. There are two related areas in economic news that we all notice: inflation and a slowing economy. Last week's inflation numbers show that the price of things continue to go up, but not as fast as last month when compared to last year. Prices are still high, and only time will tell if they are coming down. Look at gas prices. They're coming down, but are still 67% higher than a year and a half ago. Low gas prices will help bring inflation down. A slowing economy can mean a recession. A recession traditionally is defined as 2 consecutive quarters of negative GDP growth. Basically, that's showing that the economy slowing down isn't a fluke. And we've used that indicator since 1974. But it's more complicated than that. And the truth is that it's been a good indicator for decades. Economists can't agree if a recession is occurring or if it will. And there are many ways to predict a downturn in the economy. But they're more complicated than we like to get into on this show. And a recession does not mean home prices will drop. The Federal Reserve raises interest rates when we have inflation. And inflation is higher now than since the early 80s. And if we use the same model as in the 80s for inflation, it would be at 17%. That makes it hard to predict how inflation will affect prices. Historically, it means they'll go up. But the data is old. We do know that when the Federal Reserve raises rates to curb inflation, the point is to slow down the economy. And it looks like that's happening. If we end up in a true recession, rates will come back down. And it's a strange time, but if the Fed stays vigilant in their fight against inflation, we won't see lower rates for another year. Fortune magazine says over the past 5 recessions, mortgage rates have fallen an average of 1.8% from the peak seen during the recession to the trough. And in many cases, they continue to fall after the fact, as it takes some time to turn things around when the recession is technically over. Yes, we will see a correction in prices in some areas. I'm seeing it now, though many were priced too high to begin with. Sellers need to price their homes correctly to maximize their net proceeds. But buyers have an opportunity as prices come down a little because inventory is up. And I've said it for a year and I'll keep saying it. There will be no real estate crash. And why do I say that? A few reasons. Number one, housing demands exceed supply. We need more homes. Number two, lending standards are still under control. The last crash was caused by irresponsible policies that include bad lending programs, and that ended in 2008. Number three, foreclosures are low. This is a lagging indicator, meaning it could change as unemployment numbers increase. But news is great right now, and it's hard to predict how long inflation will negatively impact our lives. Interest rates will come down, but when? I say give it a year. And as for a market crash, not happening. Of course, I can't predict global conflicts, and I have no idea whether China will invade Taiwan. This show's about real estate, so you'll have to get news about communist dictators from somewhere else. And on that mostly good news note, that's it for our show. Thanks for watching. We'll see you next time on All the Right Moves with Jeff Moss.